Indian equities end at the day's low after a largely range-bound session of trade. The Nifty slips below the 24,500 mark, losing almost 100 points. The sensex is down about 350 points. Nifty Bank leads the underperformance.
Astral and Praj Industries fell after posting disappointing results, while SJVN gained on strong earnings and the launch of a new solar unit. Titagarh Rail also advanced after assuring investors it will recover the production loss from Q1.
MD and CEO of BSE addressed the buzz around curbing weekly expiry. Mr. Ramamurthy said that the exchange would look at the final views coming in from the regulator, but says it's a speculative scenario as of now.
Well, hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear up for the next trading day. I'm Amakshi Doria, and with me is my colleague Sudip. Sudip, good afternoon to you. Not a good afternoon for the market.
Yeah, I know. We started the week, Amakshi, on such a promising note yesterday, but today that volatility was back and we ended up losing, all of our early morning excitement. So ending at the day's low never feels that good. Just to round this off, if you contrast India's performance with global markets today, then again, that's a weak spot because a lot of the Asian markets had a much better session. In fact, many markets were rallying quite a bit. The Japanese market, the Nikkei, for instance, was up 2%. It hit record highs. So we'll talk about that as we go forward. In fact, what was the big talking point in the morning was this 90-day extension that China has managed to secure in terms of the trade and tariffs with the US. So in general, the mood was fairly buoyant across Asia. The mainland Chinese market was up about 0.5%. Hong Kong managed a little bit of gain. Japan was running away, like I said. But none of this really rubbed off on India. And we ended low. Both the large cap screen and even mid caps were actually. So not too good a Tuesday.
Well, absolutely, Surbi, and this continues from last week wherein all the global indices were up for the week, but India, on the other hand, was not doing too well. Today, of course, the market had been flip-flopping between the red and the green. The Nifty briefly crossed the 24,700 mark as well, but we've cooled off almost 200 points from the day's highest point, and largely the fall is being driven by the banks. Take a look at HDFC Bank, ICICI Bank, as well as Kotak Bank. These three big companies were some of the top drags for the Nifty. Accompanying them was HUL as well as Reliance on the downside. Now, there were also a couple of stocks in the broader market that actually declined, especially in the last hour of trade, where they saw a very sharp fall. This list includes RVNL. Take a look. That stock has been down and out in trade today. It was doing fairly well in the morning, but, after just in the last couple of minutes, that stock has tanked. There you go. RVNL was down almost 4% today. Apart from that, Abbott was the other stock that took a very big knock in today's trading session, and so has GSK Pharma. I think we have a whole host of, action-packed, lineup on the show.
Absolutely. So let's talk about what we're covering over the course of the next 20-odd minutes. We'll start off with the movers and shakers of the day, and Vivek will give us the detailed account of how stocks moved around. We have a lot of mid-cap earnings to track, so we'll focus on the likes of Astral and Praj Industries, big drops coming in on some of these stocks. Then we'll talk about Suzlon Energy, where a change of management seems to be, at play. Last but not the least, we'll dive into all the events to watch out for tomorrow. But let's kick it off, as always, with the movers and shakers of the day. Vivek here with the details of the green, but a lot of red as well. Vivek.
Well, absolutely right. Very volatile trading session, red, green, and then back in the negative territory. Quite a few stocks in focus today. First on the list has to be Alkem Labs. This particular company came out with a very good set of numbers. Margins above what the guided range of the management itself was. On the back of that particular stock saw a strong up move higher today. The other set of stocks that managed to do quite well was the entire mid-cap IT space. That particular set of stocks did quite well. You did see names like Coforge, Oracle, all of these stocks doing very well. Even some of the other smaller names like Sonata Software did join in the rally, especially as far as the broader end of the markets were concerned. SJVN numbers came in the dying minutes of the session yesterday. Management commentary strong in terms of capacity addition. And on the back of that stock managed to end higher by over 5%. Samman Capital, our colleague earlier today, told us that, the CFO of Switzerland could be headed in that particular direction, to that particular company. Stock ended higher by almost 4%. And Granules, decent set of numbers in the quarter gone by. Some positive commentary coming in as far as the Gagillapur facility was concerned in terms of remediation. And Granules, that particular stock ended higher by over 3%. But like you mentioned, quite a few laggards as well. First on the list has to be Astral. That particular number, overall weak set of results. Margins took a beating. Guidance too was quite muted. So Astral amongst the top laggards in the session today, over 8% lower. And very similarly, Praj Industries going into the results, that particular stock was very weak. But even after that, it was a big miss as far as what the street was anticipating. Very muted set of numbers as far as Q1 is concerned. So Praj Industries was the other stock that did see significant selling pressure throughout the trading session. KNR Construction, another stock from the broad end of the markets, the infra name, that particular stock too, muted set of results. Top end miss, especially when you're seeing both revenues as well as profitability lower by almost 25% on a year-on-year basis. And lastly, Action Construction or ACE, this particular stock, one of the top drags as far as the NSE 500 is concerned today, down on pretty sharp volumes as well.
Well, thank you so much for that comprehensive list of shakers and movers, Vivek. But moving on then, one casualty in trade was Astral. The company's share slipped in trade today after the company reported a muted set of Q1 numbers. The net profit is down by over 30%. The margins also declined by nearly 200 basis points. Ria is here with more details on this. Ria?
Astral declined around 7% today after reporting a very weak set of numbers. Revenue was lower by around 1.5%. EBITDA and net profit down by 14% and 34% respectively on a year-on-year basis. Margins also seeing a steep contraction of around 191 basis points. Even if you look at the individual segments of the company, the plumbing business as well as the paints and adhesives business, both have seen a very sharp margin contraction, and the volumes for the plumbing business have remained largely flat at around 56,000 metric tons in this quarter. Now, the company has said that the overall demand scenario in the polymer industry remained quite weak for quarter one of FY26, and that the previously price volatility that we've seen in the last few months has resulted in inventory losses and has also affected realizations for the company. But they've also highlighted that PVC prices have been settling down since the beginning of quarter two of this year, and market conditions are also seeing some improvement. So the outlook still remains positive, but nonetheless weak set of numbers, and the street reacted negatively to these numbers today.
Well, thank you so much for that, Ria. But the other casualty of the day was Praj Industries. The shares saw a dip of almost 8% today. The company reported a sharp year-on-year decline across all key parameters in the first quarter. Let me quickly take you through the numbers then. The revenue saw a dip of almost 8% year-on-year. The EBITDA margins contracted by over 800 basis points. The EBITDA saw a fall of almost 66%, and the net profit saw a very sharp fall of almost 94%. Now, keep in mind that this is because in the base quarter, the net profit did include an exceptional gain of around 28 crores. And even if we remove that sort of impact on the base quarter, it is still a very sharp dip as far as profitability is concerned for the company. Now, segment-wise, what did not do too well is the bioenergy, which accounts for almost 60% of the company's revenue. It was down 24%. On the other hand, engineering and high purity reported good double-digit growth. This time around, performance for Praj was impacted by the domestic ethanol business, where there was delay in execution cycle as well as liquidity crunch from the customers' end. Apart from that, the Genex business also incurred expenses with no corresponding revenues. The delayed execution of couple of high-value engineering orders also led to high labor costs as well as infrastructure costs, as well as the ordering activity was quite muted. The order inflow actually dipped by 11% this time around, and Sudip, that actually explains why the stock was down and out in trade today.
Yeah, absolutely. Another disappointing quarter, and it's been happening repeatedly the last couple of quarters with Praj, like you said. So yes, not that great for investors, but let's discuss this and a lot more. Our guest on the show is Jai Bala of Cash the Chaos, and we also have Sudip Bandopadhyay of Inditrade Capital joining in. Let me, start with Jai with a quick market question. Jai, you've been keeping a positive view on the market throughout this period of consolidation. Just tell us, because people would be getting confused. They don't know what's working now. The market seems to be lacking momentum. So any specific, trading ideas or sectors to watch out for from a more positional view, since you are optimistic overall?
Outright, it's the nifty auto that's possibly going to lead the market higher. And the fact that markets have been going one day up, one day down, that itself is a positive sign from a positional medium-term a market that's finding difficulty going down, that tells us the ease of movement is not, the path of least resistance is not on the way down. The path of least resistance is on the way up. The market structure it's very nearly, completed the corrective structure, and 24,337 potentially has put in the corrective low. And if there was to be one more low below 24,337, it's very unlikely to exceed 24,021 because of this overlapping move. So this overlap, one day down, one day up, that's actually a positive thing to consider for the corrective structure. So when it comes to your sector, after autos, I think it will be metals which will join the rally. And I would consider Reliance itself as a sector. It's not yet showing signs, but I think that's very likely to come back to action. Also look at BSE Capital Goods. It's coming to a very important support.
Well, thank you so much for that, Jai. But moving on then, shares of Alkem Labs rallied after it beat street expectations in the June quarter. The company reported a volume growth of nearly 3% this time around, and the net profit also rose by 22%. On the other hand, Marksans, let's first focus in on Alkem Lab. Ekta is here with the report card. Ekta?
Well, yes, overall a good performance for Alkem. The revenue growth was around 11% better than estimates. The margins came in at around 21% and a profit of over 660 odd crores. India sales were good. It clocked double-digit growth of around 12%. International sales were up around 9 odd %. US did well within international sales. It was up around 8.8% and is around 21% of their total sales. Non-US sales, which is around 11% of the business, was up around 9.1% for the quarter, and the company said that they are accelerating the non-US segment. Marksans, it was a weak operational performance which weighed on the stock this time round. So the revenue was down up around 5 odd % on a year-on-year basis. Margin 16% versus 21.7% year-on-year, and a profit which was down over 30% on a year-on-year as well as sequential basis. While the US and North America did well, the UK and European segments as well as Australia and New Zealand declined this quarter in double digits for Marksans, and that probably weighed on the stock this time.
Big moves there. Marksans down 11%. Actually, lot of big earnings moves, like we've been telling you. Astral and Praj on the way down, Alkem up, and Marksans again down. So let me throw this open to Sudip. Sudip, hi. Great to have you on the show. Any of these stocks, I mean, all of them, some of them, the ones you track, and any comments to make, because investors would be wondering what to do, especially with the ones that have fallen, like Praj and also Astral.
Well, let me first comment on Alkem. I think I've been talking about this, Survi, for quite some time, that let's try and focus on pharma companies which have got a significant business in domestic market. Alkem is one of them, close to 70% business in India. So it's good to focus on these pharma companies because the growth is steady, and I think the focus is clear, non-US business. So Alkem definitely is a good buy, but from a long-term perspective. As far as the companies which posted negative or subdued set of numbers, we do like the entire PV pipe industry, Astral Pipes, and this entire segment was a good segment to look at. Unfortunately, the numbers of Astral have been very disappointing, but I think this probably will throw up an interesting opportunity for acquiring from long-term perspective. I'm not recommending a buy in Astral immediately, but the space is worth watching. And let's see where the correction stops, and then it may be worthwhile looking at it from acquisition. I think a lot of factors went wrong for Astral in this the past quarter, but demand scenario remains strong. And I think the way the economy is poised, the way the spending in economy is happening, somewhere the consumption will pick up significantly. And I'm sure Astral also will pick up. Maybe in Q2 itself, we will see a significantly better set of numbers.
All right. And Jai, if you can just come in on, Praj Industries, which was the other casualty of the day. The stock has corrected almost over 50% year to date. The valuations also are down almost 57% as compared to the peak that we saw in FY25. So at this level, is this an attractive buy, or would you still wait?
The price structure, unfortunately, still doesn't look good. The momentum is still to the downside. It's fallen nearly 50% from its all-time highs, but I don't see a bottom formation for the stock yet. Similar structure for Astral too. Astral, as long as it must hold 1188 to 1100. there's a very two possible structure potential in the long term. So as long as the stock can hold about 1188, there is still bullish potential for the long term. If 1180 to 1100 were to give way, I think that it signals a significant long-term top. But if 1188, 1100 were to hold, I think this is a short to medium term correction, and the Astral stock can try to recoup its recent losses and go back to 52-week highs.
Sure. And Sudip, I'd just like to bring you in as well on NSDL, because this is one counter that has been doing quite well since its listing. Of course, yesterday was a blip, but I know it's a fairly short period of time for the counter on the bourses. But what is your view on this particular counter, given that the valuations for NSDL have now, surpassed those of CDSL as well?
Well, I've been positive on all these market infrastructure companies for the last 1.5 to 2 years. And I believe from a long-term perspective, financialization of saving is a reality. And this will definitely help all these companies to do well over the long period of time. But having said that, I think we need to be cognizant of the valuation. And I think, NSDL reaching CDSL-like valuation is, little fully priced, I would say. Because between the two, I definitely like CDSL because their revenue stream will be much more sticky, considering the almost 4 times the customer base which CDSL has, and the charges for the customer are on a folio basis, transaction basis. So it's not on value, it's not on so I think NSDL has a distinct disadvantage vis-a-vis CDSL in terms of revenue and profitability. It's very clear if you look at the numbers. So I think, NSDL attracting the kind of valuation multiple which CDSL attracts, I think is little too full, and I will be a little careful in NSDL at current levels.
All right. Thank you so much, Jai, as well as Sudip, for joining in with your take on some of these counters that were moving around in trade today. But with that, it's time for a short break. We'll get you the top corporate voices along with key market events to watch out for on the other side. So don't go anywhere.
Welcome back. You're with us on Markets Forward. Well, we had a very interesting corporate interaction with the management of BSE today. And of course, we did quiz Mr. Ramamurthy, the top boss of Bombay Stock Exchange, on whether the business is now stabilized, because we know that the capital market segment has been going through a lot of regulatory changes. Vamakshi's been on the top of all of this, right? I mean, a lot of these curbs that are coming in on the derivative segment, but this quarter the numbers actually were pretty decent for BSE, weren't they?
Well, absolutely, Sudip. This time around the quarter, the numbers were quite good, and there was no contribution that went into SGF, which is why the margins also looked slightly better, and the gap of the margins between BSE and NSE actually narrowed down. In fact, we were also joined by the management, and they have highlighted that gaining market share for them is not a target. They would like to first have 800 members, 500 FPIs, and more longer tenure contracts, and that is something that may or may not result in market share gain. So that is something that they're focusing on. And apart from that, what they've also said is that, they are focused on diversification of the revenue streams. They're not focused on improving margins, but it could be a result of that. In fact, let's also listen in to what the management had to say.
The starting point is still a speculative situation, that if it happens, so we have to deal with it as and when it happens. If it happens, what we all know is whatever is good in the interest of the market is what the regulators will do. So therefore, we need to wait for what the regulatory thought process is, more so because the regulators have clarified. If any reply were to be tried by me now, it is based on a speculative thought process.
Okay, that was BSE on this whole business of what happens if at all weekly options expiry gets changed to a fortnightly expiry now. But he said it's speculative, so best not to comment. Let's move on. Indian Hotels is set to buy 51% stake in 2 entities with 135 mid-segment hotels across India and Sri Lanka. This would be at a value of about 200 crores. That's how much they're looking to spend for this acquisition. The move will help the hospitality major expand in a new segment with a wide geographical footprint. We caught up with the company's CEO, Puneet Chatwal, about this expansion.
There'll be a rebranding exercise over the next 18 months. Some will take 18 months, some will take 3 to 6 months. The hotels under development can be easily changed. That's not an issue. Some may not fit in and might have to exit. So we'll do it case by case. A team has been appointed. The majority of the Ginger hotels operate somewhere between 3,500 to 6,500 rate. There are certain outliers which could be below 3,500, like a Ginger in Chanakyapuri in Delhi is at around 9,000 plus. So those are like the outliers, but the majority of the portfolio, depending on a tier 1, tier 2, tier 3 city, is between 3,500 to 6,500. So our opening that we have often spoken about, Prashant, you and I, and on your channel, the Ginger Mumbai airport is exactly at 6,500.
Well, that is the management of Indian hotels speaking on their expansion plans. And before we wrap, we bring you some key market events to watch out for. Upasana is here with more details. Upasana?
Well, first up, let us start with the global economic cues, starting with US first. IEA monthly report and even crude oil inventory data will be out tomorrow. And also the most important thing is the FOMC member Bostic speaks tomorrow on the economic outlook. Now, in terms of global earnings, we'll be closely watching out for Brinker International, Cisco Systems and Tencent Holdings. All these are the US-based companies. Now, let us look at the Indian markets. Now, as we come towards the end of the results season, we'll be watching out for some of the important earnings that will be reporting their numbers tomorrow, such as BPCL, Max Healthcare, United Spirits, Deepak Nitrite, IRCTC. All these counters will be reporting their Q1 FY26 numbers tomorrow. Now, stocks like Dredging Corp and MIRC Electronics will also be in focus on the back of corporate action, as their board meeting is scheduled to consider fundraising plans of these two companies. Now, Bluestone Jewelry IPO closes for subscription tomorrow as well. And lastly, trade unions, farmers to protest against US tariffs and India-UK deal effective from tomorrow. So, all in all, looks like quite an eventful day tomorrow.
Okay, all right. Upasana, thanks very much. We will, of course, keep all of those events on our radar. And with that, it's a wrap on this edition of Markets Forward. Thanks so much for watching. We'll be back with more news and updates in just a bit.